It's really lovely to see you, albeit virtually. It's still good to be here with you guys. My name is Sharon Sarai, and I'm the Training Delivery Manager for Thornfields. I'm also an ILM Centre Manager for the business, and as some of you may know, Thornfields is part of the FPM group, which I'm confident you'll be well aware of after today. So if we have a look at the FPM slide, it'll just tell you a little bit more about the group. So we've got First Practice Management, we've got My Surgery website, and of course the training arm, which is Thornfields. Now, having had a really successful first session, it gives me great delight to actually welcome Phil Harnby, our accountant and friend to Thornfield. So he's just going to give you a little wave. Now,
Phil, good afternoon, everyone. Sorry.
Okay. Phil looks after many practices up and down the country, and I know he particularly likes this engagement with managers that he meets and he works with. So today, this short time together is all about us giving something back to you guys for all the hard work and dedication to your industry of care and commitment. It has been a challenging 2 years, and I just would like to say all credit to you for the way you have journeyed through these turbulent years. So just some basic housekeeping, if I may, and then it's over to Phil, just so that it keeps us on track. This session, as you can see, is being recorded. If you have any questions, feel free to add them to the chat facility. And if we don't get through them all today, we will certainly come back to you with a follow-up guide and a link to the recording. This will go out to all the attendees. So if you could kindly hit your mute buttons, that would be great. This presentation will last approximately 20 minutes and then followed by a 20-minute Q&A session. We also have Helen here with us. So Helen, hi there, Helen. Helen is our National Account Executive. So if you have any questions on the training side in relation to finance, please just include a little note in the chat box. Okay, without further ado, it's over to Phil. Thanks, Phil. Over to you.
No, thank you very much for that very good introduction. Good afternoon, everyone. I hope we're all keeping well, and we've got a suitable beverage in our hands. So as Sharon very kindly said, my name is Phil Harnby. I'm a chartered accountant based up in the northeast, and at the moment it isn't snowing, so I think that might change tomorrow. So very quick disclaimer, I'm not giving anyone specific advice today. It's kind of generic information. If you want to kind of get in touch with us, and if you want anything specific, by all means, we'd be more than happy to do so. So as I mentioned, the firm that I'm proud to be part of is a firm called Mitchells Griefson. We've been going since 1973. So a reasonable length of time. We're based up in the northeast, but as was said, we do kind of cover work across the whole of the UK, and we've always had kind of a specialism in the healthcare sector. Myself working with GP practices now for over 10 years, or as I like to tell a lot of people, before I lost a lot of hair. So it's probably quite a pertinent subject at the moment, this, with regards to practice managers either being offered partnership or looking for partnership. And I was saying before the call started there, we've probably got about 10 to 20% of our practices are either actively looking at this or already have a partner who is a non-clinician. And we're going to specifically focus on PMs, because that's kind of the idea of these sessions. But what does that mean? So what does being offered partnership mean? And presumably you are already involved in a partnership that you might have been offered, or it could be that you've seen a job opportunity on one of the Thornfields First Practice Management Group websites, and you may well have then applied for that role. But fundamentally, and I've put the wedding bands there because partnership is effectively marriage. You are getting involved with other people and signing a legal document, and money is most definitely involved. So it's not something you rush into, and you absolutely need to know the people. And that might sound a bit silly if you've been involved in that partnership. You might have started at a more junior level and worked your way up over 10, 15 plus years. But that's very different to working with and sitting around a table with people. And if you don't fundamentally get on, or you don't have the same, ethics is a strong word, but the same outlook on life, then it's pretty much a recipe for disaster. So you've got to satisfy yourself in your own mind of actually, do I know what I'm getting myself involved with this particular partnership? And if you don't know that partnership, again, doing a lot of what we would call due diligence about that organisation. So is the things that are going to come out of the woodwork that you're potentially going to be having to be party to. So it's not something that you do lightly, and it's certainly something that you need to be cautious of. There's one document that would hope to protect you and protect your fellow partners, and that's your partnership agreement. And I'd ask for a show of hands, but that potentially could be a little bit embarrassing. Partnership agreements tend to be in different versions, either draft, never been looked at, signed in a desk drawer, or the worst one, just in a desk drawer, believing it's been signed. And I give this advice both to GPs moving into partnerships and current partners, as well as kind of non-clinical partners joining, that absolutely the partnership agreement is the fundamental document. And I personally wouldn't join a partnership without already having signed one. Yeah. Because if you're not signing up to that agreement prior to, you're effectively agreeing to the Partnership Act of 1890, and that's the year 1890, which was quite a while ago, and the world has moved on significantly since then. So that the partnership agreement is the document that hopefully one only needs to refer back to if there's a problem. But it's absolutely a document that is the bedrock of the partnership you're working in, and kind of being able to look at that prior to joining, to being able to have the opportunity to seek your own advice around that document is really crucial. So if we kind of move on from the kind of the legal side and the aspects of that and start to look at the monetary side of it, I think this is a question that I don't think in this country we're very good at, is that actually how much are we worth? We don't like talking about money, I think, fundamentally, but I think we struggle to understand and probably often undervalue ourselves. And absolutely, as that kind of top bullet point says, PMs have a huge amount of value to practices, and I think a lot of PMs are already doing the work that probably should be being done by a partner. You're responsible for HR, you're responsible for health and safety. You're certainly the person that the CQC deals with if they turn up at the practice. So there's lots of things that you are adding a huge amount of value to, and that's often very difficult to put a number on, because actually you helping resolve HR problems in the practice has zero value. But if you don't help with those HR problems, and you end up in an employment tribunal, that could be tens of thousands of pounds. So the value that is brought is often not a line we can pick out of the accounts. And absolutely, if you're already in the practice, there will be a line in there that includes the salary that you're currently earning. But there's a lot of hidden things that don't have, a pound sign and some numbers after it, which I think need to be considered when looking to become a partner. And I did look through all of the questions that people had kindly sent in prior to this, and tried to incorporate some of those questions into this presentation. And one of them, hence the number of question marks, which is often asked, is parity. And what we mean by parity is are your earnings at the same level as any other partner in a practice? And it's not unusual for PM partners, practice manager partners, non-clinical partners, to not have the same parity, so the same level as a clinical GP. So if we've got an 8 session, so full-time GP, and then a full-time practice manager, it's not unusual for them not to be at the same level of earnings, of profit share. Now that's something that you almost need to ask yourself and the circumstances and the partners that you're involved with of actually, well, where do we sit? How do we value a non-clinical session against a clinical session? And that often is very, very specific to your individual practice and the partners that you're involved with. And you know, there is often some gentle negotiation over time, and what I certainly have seen in a number of instances is that you start at, pluck a number, 75% of a full-time and work your way up over time. I've seen others that have gone straight in at the same level, and I've seen others that have stayed at a level. There's a lot of kind of different options that are there, and one thing that is often kind of talked about is different types of partnership. And you might have heard of things like fixed shares, and that's where effectively you're given a fixed amount of income. So as a salary, you agree a salary at the beginning of the year, or more like, you know, you're told what your salary is for the year ahead, and that's your income. So whether you bring in extra funding or you prevent that employment tribunal issue or things like that, that's what you're going to earn. A fixed share in a partnership is the same. It's a fixed amount of profit, so effectively a salary. And we'll come on whether or not that's beneficial at all in a moment. So it's worth, I think, having a look at the difference between a salary as an employee and a profit share as a partner. And that could be, as I said, a sessional based partner, a parity based partner, or a fixed share partner. What the practice has got to remember when it comes to looking at these, because there's always two sides to these conversations when you're looking at moving from being an employee to a partner, is that the partnership as a whole is going to save some costs, but it's going to have to share that profit amongst more people. So there's got to be a balance, I think, between those two kind of competing bodies. But you as a cost, so you as an employee of the practice, is not just your salary. There's also employers' national insurance and employers' pension as well. We've got a separate slide on pension shortly. But there is more than just that cost of your salary. So if you're on a salary of X, actually there's some employers' national insurance which the practice is paying on top of that. And that employers' national insurance doesn't exist for partners. So if you're a partner receiving a share of profit, that doesn't exist. We need to account for that. Generally, and I double checked following kind of the spring statement last week, taxes are better for a person as a self-employed partner on a self-employed taxes basis, so not as an employee. And that's one, because of the rates, but two, there's also extra things that partners can claim. So I think we've got another session coming up later on about personal expenses, but there is expense type costs that you can potentially claim as a partner, but can't claim as a salaried employee, and that can slightly reduce your tax liability and your tax burden, and effectively you will as a partner be tax wise paying low levels. There is a bit of a win there as well, and there's also then the consideration of who pays the tax. The taxpayer, if you ask the revenue, is always the person responsible for paying tax. But you've got to remember, as an employee, it is taken off before you see it. So you get your gross salary on your pay slip, less any pension contributions, less anything else, less your national insurance, less your tax that's being paid. You never see that. It goes straight to the revenue. You get your net pay transferred into your bank account. As a partner, you become responsible for your tax. So you're the person that has to make sure that your tax is paid, and effectively you're receiving the gross, and you then need to account to HMRC your tax. Now, again, depending on the partnership, some partnerships keep some money back to pay the tax, some partnerships don't. It's entirely your responsibility. But it's important to understand from day one where you sit with that, because it's no good you all of a sudden receiving what perceived to be a much higher income, spending it all on holidays, nice cars, etc., etc., to then find actually you've got a tax bill of £10,000–20,000. So you know, thinking about that up front and sitting down and looking at your own personal cash flows of how that will change and what those impacts are, and certainly, you know, the practice accountants, firms like ourselves, that's kind of what we do, bread and butter, to make sure that people are comfortable that when they get to the year end, what they think they've taken home and is in their back pocket genuinely is. So the thing to remember is, and we've mentioned a bit about kind of money coming to you and what you're going to keep, is the difference between profits and drawings. So profits are your share of the total profit of the practice. So by profit of the practice, we're looking at, you know, all of the income less all of the expenses. We've got a profit that is then shared amongst the partners, and that is the starting point for a partner's tax return. Okay, and how taxes are then calculated. What you physically receive is drawings, and if you're on the last session, we looked at kind of current accounts. I've got a little bit on current accounts shortly, but what you receive are drawings, and that is totally different to profit. So again, you need to understand as a partner what are the differences and why, and how does that ultimately affect me and my cash flow at home. Because again, it's that difference between kind of gross earnings on my payslip to net receipt. Do I owe anything anywhere else? So pensions is always a massively popular topic because there's always something to talk about. Effectively, as a partner in a practice, you're the same as anybody else. Your pension is calculated off the back of a Type 1 pension certificate. So hopefully kind of last month, so the back end of February, for all of the other partners, that would have been submitted. But again, if you're now a partner in a practice, again, that Type 1 certificate would need to be completed for yourself, and you are seen as a practitioner, non-GP provider. So slightly differently to how you are as an employee through the SD55s that are done through your payroll. So it doesn't necessarily impact you, other than you potentially will be earning more, so there'll be more going into your pot, but it's different how it's treated and calculated, and you've got to be aware of that. The one thing that you don't necessarily need to be aware of, but certainly the practice does, is the final pay controls. So potentially moving from being an employee to a partner, we'll see, as mentioned before, that kind of increase in salary. And what the NHS pensions a few years ago kind of reiterated was that the final pay controls do still exist. They are still around. If we see big jumps in income for anyone in the 1995 scheme, which may no longer be a problem imminently, but if there's any kind of big growth in those final 3 years, you could end up with an invoice from NHS pensions to cover the additional pension that would be due. So be careful about the movements. There is some special rules about movements from salary to partnership, but it's just something worth being aware of, or certainly the partnership being aware of. So I mentioned before about kind of current accounts and capital accounts, and on the previous session that we did, and there is a recording online if you want to have a look at that. where we are talking a bit more depth about current accounts. But effectively, you joining as a partner is no different to any other partner joining in, and they would expect over time there to be some equality between the current accounts. So the current account is undrawn profits. So that profit that we're earning less our drawings, there should be a residual balance there. If you've been there for a number of years, that would hopefully grow to a point and remain fairly static, but there could be an expectation for you to put some money in. So especially if you are joining a practice that you've not been involved in a long time, that might be done unusual because you're an untested entity. There is a potential to do some bank lending around that. So if you don't necessarily have the money to put in, you could certainly approach your bank, and they might be able to do something to help with that. And there's also the potential to kind of build that up over time. But again, it's one of those conversations that you have at the outset, so you don't find at the end of year one they're expecting you to put £20,000 into the practice. There needs to be some conversation about that kind of at the outset. But if it's kind of highlighted in everyone's mind that we need to be thinking about that, then hopefully it will be picked up on. Property is another area that generally comes around the capital side of things. If your practice, and I've just randomly picked a GP practice off Google Images, so if it's yours, it's not deliberate, but I thought it looked like quite a nice GP practice. If it is yours, very good. But you know, if you're an owner of, or if the partnership owns their property, there may be an opportunity for you to buy into a share of that property, and again, that can certainly bring with it additional profits and income for yourselves, and again, something that would certainly be worth thinking about and doing carefully. And again, the kind of the same as any other partner coming in, property valuations and bank lending and things like that are all very relevant, and certainly something you should be thinking about carefully if that's something that is on offer. So is it worth it? Is it worth it? I think there are already a lot of PMs that have moved into this area, and a lot of individuals that have gone through this journey, and it's definitely worth asking someone. You should be able to find somebody in your locality that can have a conversation with you about that. If you're relatively new to general practice, that might be more challenging, especially when kind of most kind of get together type meetings haven't happened over the past couple of years for obvious reasons, but it's definitely worth having that conversation. And I in the past have put people in touch with other people, said, look, will you have a half-hour chat with somebody about this? Because there's no better way, I think, to understand something than talk to someone that's done it. And you know, I'm a partner in my own business. I'm comfortable. I understand the ins and outs of accountancy and have a very good depth of GP practices, but I've never been a GP partner. So it's worth having that conversation with somebody, and it's certainly worth looking at the pros and cons. And I think the one thing that I've deliberately left out of this is actually how much am I going to earn, because that's not something that we can do generically across the whole of the UK. It is very much down to the other partners in your practice and the practice that you're in. So the profitability of that practice, the same as kind of comparing, you know, what is a GP earning in County Durham compared to what is a GP earning in Cornwall. The two figures won't be necessarily comparable. So looking at kind of a pros and cons list of what benefits are you going to see, what potential cons are there, and the same with any partnership. You know, you have the risks of being a partner. You are the employer. You are responsible for health and safety. So there's plenty of things you've got to be cautious of and careful about, but there's also plenty of pros. You know, and I think sitting down and running through that list, and that's something that kind of we've done as a firm for a number of years with people that aren't clients. I did a similar exercise for somebody a few weeks ago in the Leeds area who's looking to move into partnership. So kind of sitting down and having that look as to what those risks versus rewards are is definitely a sensible thing to do. And I think that brings us to a point of any questions. So I don't know if anyone has any. I just need to play around with the screen so I can see people again, because everyone disappears when I start presenting for some reason, so apologies. I think everyone's back, so hopefully if anyone has any questions, you can ask away. Oh, I did say I was going to mention fixed share. Apologies. So yeah, so fixed share is where effectively you are given a salary. So I'm just going to pluck some random numbers out the air, so nobody quote me at a later point of this is what Phil says a PM's worth. So fixed share is where you agree at the beginning of the year, right? You are going to have £75,000. Yeah, that is, so it doesn't matter whether the practice profits go up or down, we're going to give you a share of £75,000. Now, from your risk point of view, that's actually quite good because I know I'm going to earn £75,000. But if you work your socks off, you're only going to work £75,000, and you might be absolutely happy with that. That might be absolutely, you're comfortable with that. That sits comfortably, and everyone's okay. But you've not got any of those rewards, and the idea of partnership is that kind of risk and reward. That actually the partnership works really well. Everything starts singing together, and actually it could be well above that 75 because it just works so well. And I think I have seen in partnerships where you've got an individual that has been a PM for a while, and one would assume you're already doing the best you can. I don't think anyone's going to argue with that. You're not going to all of a sudden be a better practice manager just because you're a partner. But I have seen that kind of that slight change in not necessarily the attitude, but just how things work. And actually, you've got that bit of buy-in, you've got that bit of additional responsibility, and actually things do work a bit better. Things do work a bit smoother. You know, there's a better kind of mix amongst the partners around the team, and profits go up. And I've seen that in a couple of practices where kind of a PM's come on board. So absolutely fixed share removes any risk of your profit shares going down, but it also removes any potential increase in that. Can you negotiate a minimum level of salary? Yeah, I think absolutely. I think you've just got to have a look at kind of the FPM Thornfield's websites, and they have on kind of what the job options, the opportunities that are out there, and PMs are in demand. There is no, and certainly good ones, especially so. And as I said, the kind of ability of PMs to add a huge amount of value to practices is absolute, and I think that they're having a look at kind of what jobs are available in your area and what salaries they are commanding. I don't think it's unreasonable to go back to somebody, and we're not, I'm absolutely not recommending blackmail here, but look, this is the work that I'm doing, this is the value that I'm adding. What can what is out there? Two popped up there together, and I wasn't fast enough. So let me just see if I can get back to. It's probably in the chat. There we go. So I meant to say that you share profit, but not less than. Yeah, you can have that. So that's sometimes I don't think there probably is a proper saying. This what I call that is fixed share plus. So we agree a fixed share of, let's say, that's £75,000, but actually if partnership profits are above, plug another number, £1 million, I get a share of that amount above £1 million. And again, use any numbers that you want to in that mix, but that absolutely gets you potential for a best of both worlds, where the kind of the current partners aren't necessarily going to lose out and don't feel that they're giving away some hard-earned profit, but also at the same point there's an opportunity for you to earn beyond that agreed initial figure. So yeah, that is absolutely certainly an option. And any suggestion of how to move from fixed to variable? No, I think that's a very valid question. It's a bit like that moving from parity moving from a percentage up to parity. I think it's definitely something that I think should be encouraged. And I think over the course of time, I would like to think if you've got the right partners, that should be a generally easy step. That actually, it's working really well. I'm doing the things that I'm doing, and certainly of the practices that we look after, I can think of at least two where actually the partner, the GP partners are now earning more because of that move that PM has made from being employed to a partnership. So those GPs are financially better off. So I think if I don't think it should always be just about money, and that's, I know, a bit odd coming from an accountant, but there is there is a balance of that we're all going to work to earn something, so there's got to be some kind of financial reward to that, and then separate that, but actually what other things are being dealt with. And I think a lot of the things that PMs do are not seen. And that's probably really, really good. So again, a bit like that HR issue, nobody knows about it because it's just been dealt with and it's all sorted. But we don't ever tell anyone that we've dealt with that and it's all been sorted. So a lot of the things are kind of unseen and not experienced by even potentially partners around the table. So that kind of ability to show kind of worth and value can be sometimes a bit difficult. And yeah, I think you're completely right. The challenge is exactly that. It's convincing the partners that you're worth the money and the value of the practice. And I think, you know, as I said before, kind of switched on practices and partners are well aware of that. And that's why I think we're seeing this kind of, you know, kind of trend towards partnership for PMs, because you do pick up an awful lot of slack that would just not be dealt with, or couldn't be dealt with. Years and years ago, when PCSE came involved, I had a partner that got really annoyed with their PM. So this is ridiculous. You're just giving me nonsense that Open Exit doesn't work. It can't be that bad. I'm going to do your job for a week. He lasted a day, and said, "No, you're all right. You can take that one back." And it is. You don't know what someone else's shoes are like till you've done that proverbial mile. And yeah, you're absolutely right that seeing that wealth is sometimes difficult. So yeah, I suppose that's a question from Karen to Wendy about whether or not she has equal parity. I'm not going to make you answer that question if you don't want to. I said I've got a mix in my client bag of people that are equity and people that have a bit of a percentage. And I think, you know, it comes down to that partnership and the partners that are there. So Sharon's kindly asked, can I recommend any free resources on the web, government websites, for examples that are handy for PMs? I mean, certainly, you know, the Form Fields and First Practice Management website, that's got quite a bit of stuff on there. I think that there's definitely some support within that. I certainly think you should, if you're being offered partnership, you definitely want to take some advice as well, and whether that be from the practice accountants or from a firm like ourselves, that potentially independent. From the partners, the practices accountants. There is, but I think definitely speaking to your peers, and if you're aware of anyone in your locality that are even further afield that's happy to have a half-hour chat, I do think that's relevant. And Wendy has kind of replied that she does. So here we go. And then Emma's asking, do you have some capital to pay advance of tax? So do you mean by that, do you pay tax on the current account monies that you put in, or are we talking about kind of future tax payments after we know where the taxes are? Yeah, so I think Rosalind is kind of re-emphasising what I meant there. So Emma's come back now. I think we might have to pay some on account. Yeah, they do. So once you become a partner and you start down the partnership route, as I said, you become responsible for your taxes. So your first tax bill is generally pretty healthy, is large, is probably the best way to explain it, and that's because of these payments on account. So when you start in partnership, what you've got to remember is you're actually not paying any tax. So if you started in partnership on the so it's a March year end, you start in partnership on the 1st of March. Let's use this year, 2022. The first time you will pay tax is January 24. Yeah, so a long way away from where we are today. But that tax bill will be quite large. It's all the tax up to the 31st of March 23, plus a payment on account for the next year. So the advice I give every partner is that you start saving for tax the moment you start as a partner, and then when you get to that point, your first tax bill is there, you should have saved enough. And again, it's a good kind of spot on why you should be speaking to, you know, either the partnerships accountant or another accountant about, well, actually, You know, as I kind of said on one of the slides, what am I going to earn? What am I going to keep? What do I have to pay? And making sure you've got that kind of tax element right makes a lot of sense. So there's a couple of questions that came through while I was talking there, so I'll just have to scroll back a bit. So the question about indemnity. So you're not indemnifying any clinical work. So and generally the kind of indemnities that you'd be looking at are the general public liability type stuff and employers type liability. So normally speaking, the insurances would ordinarily be in place, but it's also worth checking with your insurers that they're happy that there's a non-clinical partner, and I can't see why there wouldn't be. I've never seen a scenario where there weren't, but as with all insurers, if you keep them up to date, they're normally quite happy. So it's worth just keeping them abreast of what any changes. And the only other thing that you might want to look at, which is always sensible for anybody, is kind of life covers and things like that. There obviously the NHS scheme provides a lot of stuff, and you don't want to over-insure, but it's worth double checking on that. You know, certainly kind of illness and sickness type covers as well that might change from being employed to being a non-employee. So I've been a full partner to join and we'll be happy to have a chat with them. There you go. So Beverly is more than happy to have a chat with anybody if anybody wants to. Your inbox might end up being flooded there, Beverly, but that's very kind of you. That's yes, yeah, you could certainly take on some more responsibilities to justify that kind of move between roles, and yeah, the potential loss of SSP, and it then comes down to what's in the partnership agreement. So if you sign up as a non-clinical partner, that partnership agreement should be equitable to everybody. So again, it's what's in that partnership agreement as to what's covered for SSP and maternity leave, bereavement leave, holidays, all that kind of thing. Effectively, the partnership agreement replaces your employment contract. So all the things that you're protected with through your employment contract, you're then protected by the partnership agreement. So again, understanding and being comfortable with that is important. Yep, I couldn't agree more, Wendy. You know, you are the experts in that building compliance, the CQC, you know, the list goes on and on and on. And I'm not sure if there are any doctors in this room, but the majority aren't experts in those things and rely on the practice manager to cover those roles. And as I said at the outset, normally silently. You know, you don't know that those things are happening. And you know, I said a couple of weeks ago I was dealing with a gentleman who was looking to join a partnership in the Leeds area, and you know, he was kind of admitting he'd done over COVID kind of 18-20 hour days, but nobody knew. And I think that doesn't mean we're going to go back and brag, oh look, I did a 20-hour day last week, you should make me a partner. But it needs to be understood that that's happening, because you know, otherwise nobody knows and it's not necessarily appreciated. So Jill said, if a patient were to sue the practice in general rather than an individual clinician, would the NHS indemnity scheme now cover this? You'd need to check with your insurers with regards to that. Generally, your public liability policies cover that kind of stuff. So again, it would depend upon what they're suing and why it's being done, but you need to be comfortable, and that's part of the due diligence that I mentioned again about joining the partnership, being comfortable if there is anything that potentially could crop out of the woodwork, especially if you're moving into a partnership that you've not had any involvement with. You don't know if there's any employment issues, you don't know if there's any problems, you don't know if there's a patient that is currently suing because they fell over in the car park. Those kinds of things are definitely important for you to understand. And Wendy is also offering to have a chat with anybody. So, does anyone else have any other questions? Or have we hopefully covered everything? Well, we haven't covered everything, I'll happily admit that, but there is, I know you can all see my screen still. We'll after this we'll share the recording and we'll share the slides as well. I've got on the screen there the next sessions that are coming up, if anyone has any interest there. But as I've kind of said at the bottom, if there's anything that you really want to focus on, anything you want to kind of chat through, again, more than happy to do something bespoke around that, because I can guarantee if you're interested in it, there will be other practice managers that are also interested in it. My contact details are there as well. If you want to get in touch with me directly, feel free to do so. And then the final slide is a thank you. So Yes, so there is one on mergers and those kinds of things. So we'll get that done in the next couple of months as time goes on. But yeah, if anyone has anything else, by all means. I'm based up in County Durham, so in a town called Bishop Auckland. So if you've heard of Kinrun, which is a big event that's kind of being run out of this area, we're based just around the corner from there. So, yeah. Pleasure speaking to everyone. And as I said, if there's anything else, feel free to get in touch. Thank you.
Okay, thanks, guys.